Good morning and welcome everyone to episode 11, yes, 11 of Mortgage News Live, coming to you from the sunshine of Radlett today. Thank you as always to our sponsors MPowered, the Intermediary and of course Newspage for their support and microdosing packages. We have another interesting show this morning where we will mainly be talking about the mortgage market for the self-employed, an area that many people take for granted, but is essential for the well-being of the industry and indeed the economy as a whole. Quarter one for 2024 has already given way to quarter two without so much as a buy or leave. And as we survey the start of the year, there are some definite grounds for optimism. The market in the first quarter of the year has been bustling busily compared to the tumbleweed of the previous quarter. Don't get me wrong, we are miles away from chilling out on a little fluffy cloud of proc fees floating freely down Easy Street, and there is still an ocean full of issues to get to grips with, but compared to the austerity of last year, we are taking slow and steady steps forward. Nationwide's latest house price index reported this morning that in March, UK house prices saw a slight annual increase of 1.6% compared to the same period last year. This is a modest uptick from February's 1.2% annual growth. Despite a monthly decline of 0.2%, the broader trend points to a stabilising market. After the Easter break, I suspect we'll see a further rise in activity as pent-up demand from buyers, further buoyed by the easing of mortgage rates and criteria, acts to keep property prices from falling further. Swap rates have dipped yet again, and we await some fundamental lender moves on pricing. But enough of my nonsense and over to this week's playfully promiscuous panel of professionals. That'll teach me to use alliteration, who will be discussing some of this. Apparently alliteration's the in thing. I love it. And they'll be discussing some of this and looking at what is going on in the world of the self-employed. So joining us today, we have Ken James, the MD of Contractor Mortgage Services. Welcome back, Ken.
Thanks.
Katie Eatondon, mortgage specialist at Lifetime Wealth Management. Welcome back, Katie. And joining us for the first time is Gemma Bennett, senior mortgage broker from The Mortgage Mum. Welcome, Gemma.
Hello. Oh, my hands blurred there.
So, well, hello. So before we get into the self-employed world, Nationwide reported a very slight fall last month, but a small rise overall in house prices. What are you seeing from your clients, actually? Do you agree that after Easter, we could well see a busy period once more? And what do you think will happen to house prices generally? Ken, let's start with you.
Straight in there. Thanks, Monty.
Straight in there.
I have to say, I love whoever's writing your initial script is amazing. I want that script writer. Give it to me. That's what I want.
What do you mean whoever's writing it?
Did you write it yourself? Yeah. Sorry, mate. Sorry. No, I mean, the Reader Note report, John Chung, who we know, put a report out this morning, and apparently this is the highest it's been in 17 months. So it looks like the market's definitely on an up. For me, the start of the year was amazing. January was like, wow, where did 2023 go? This is like amazing. Thank you very much, everyone, for coming to me and doing your mortgage. February, it was like, where's everyone gone? Because rates started to rise, swaps were up. Everybody, every time you blinked, the rates were going back up again, weren't they? Everywhere, and it wasn't like one rise, it'd be like two rises in 1 week even. So that was very difficult. And I think clients were just sitting on the fence again. They started to creep off and then they firmly went back. But March has been really good. I think there is an air of optimism. I don't know where it's come from. Yes, we know inflation came down. Yes, we know the Bank of England base rate held, and we were expecting it, let's be fair. But it seems that people have just decided, you know what, let's make 2024 the year that we actually make some strides to move. Let's make those changes, whether it's to increase our property, the extensions. But yeah, there definitely is an air of optimism, Monty. I'm seeing it. Yeah, I don't know about you guys.
Yeah. Gemma, how are you seeing it from your clients?
I think that 2023, as we know, there was waiting and not sure what to do, and I think there's got to a point where we've kind of done that very British thing where we're adapting and we've got used to an idea, and ultimately the rates are looking more favourable than last year, and people, I think they just get sick of waiting and they get on board and go, let's just do something, and what can we do? And if we're focusing on budget over rate percentages, then it's working out for what's the best thing we can do right now. And I think people have kind of got on board with that message a bit more, because it's definitely moving, definitely that momentum compared to the stagnation of last year, for sure.
And Katie, same with your clients?
Yeah, I think across the board, everyone had a brilliant January. Thought everyone, buyers, remortgaging, every broker had a great start to the year and a good end to last year. I found February was mainly people that had to remortgage. There wasn't much stock on the market either. The buyers that I did have couldn't find anything to buy, and now rates have started to come down. There's a lot, and people have, stuff came off the market at the end of last year. People put it back on at the beginning of the year. There's definitely more stock available. I think where rates have come down, people are now considering that upsize where they weren't last year. So stuff's going back on the market. Most of my clients probably March were first-time buyers rather than home movers, and people that just got tired of waiting. And if they don't do it now, and also when rates started to go up, there was that kind of urgency. Well, are they going to go up and up and up? Let's move now. And obviously there's still time if they do come down before they can. Realistically, they're not going to complete for 8 weeks, 12 weeks. So if the rates do start to come down, they get the advantage of already securing their offer, and they can just change the rate.
Yeah, it's interesting.
Definitely looking more positive than last year.
Yes, good. Well, we'll take that. We'll cling on to anything we can get. And actually, we've seen a couple of lenders start down the innovation route as well. And last week saw the release of Accord, Yorkshire Building Society's £5,000 deposit mortgage, which at the top end does enable borrowers to get a 99% mortgage. Yes, the mythical 99% mortgage is sort of here. Personally, I quite like the innovation, and it does give borrowers an option. But what do you make of it? Do you think it's a good thing? Do you think other lenders will follow suit?
Yeah.
Ken, what do you reckon?
Yeah, sorry guys. I really like it. But then again, I think it's about the innovation. I think we've got people like Perenna doing very long-term mortgages. We've got April that have come into that sort of scene. And I think we were crying out for something again that might help first-time buyers. We've got Helping Hand with Nationwide, which might lend a little bit more. But this is totally different, isn't it? This is basically saying, look, £5,000 deposit. That's what you need, whether you're buying a property at 100,000 or buying a property at 500,000, which is the top end of it. £5,000 is all you need. Now, people have been calling me and sort of getting in touch saying, oh, can I get it? Can I get this? But I think what they're forgetting is it doesn't matter that the bank are doing it with a £5,000 deposit. You still need the income. You still need a very, very good credit score. So there'll be many people who it will help, but there'll also be people who it will miss. And you do have to be a genuine first-time buyer. If you're a couple, one of you has to be a genuine first-time buyer. One of you could have owned before, but can't own now, no background properties. And again, I think it's that word innovation, Monty. It's just having another string to our bow. It's not going to be for everybody, but I think it's nice to see someone doing something different. And like you say, that strapline, 99%, loan to value, 1% deposit is what people are sort of seeing, but they're missing the big trick, which is it is £5,000 deposit, but you do need to have the income.
But Gemma, what about you?
Yeah, well, I agree with everything you said there, Ken, because
you're the first person ever to
really maybe first time.
You are. We'll make a note of that, Ken. Yeah.
But it's true. It's the innovation is so great to see. But it's not Santa Claus. You're not being given anything for free, or But what's lovely about it is there is an option for those clients. And I got on the phone straight away to a case that was actually this is perfectly suited for. They absolutely can meet the affordability, and they are struggling to get that 5% of a property at the price that they wanted to, but not struggling to get the loan. And so. But because of rental and because of lifestyle, and so it was kind of one of those situations where, for this particular case, this is really worth looking at for them. But then there's also an awful lot of cases that not even worth looking at because the affordability won't meet them, or it's not in their interest to have such a loan to value, or for various reasons. So, like most things, there's going to be certain people that this is the absolute thing that they need right now, and for other people it's not even worth reading about.
Yeah.
But it's great to see that there's another option on the table.
Yeah. And yeah, just a reminder, we've got some comments, so let's try and make it as interactive as possible. I mean, part of the issue with this, Katie, is around the fact that you know, for London clients, it doesn't do flats, and as Bob has pointed out, you sort of need 5.5 times income for the London market, and 500,000 doesn't cover it. But it's a start, isn't it?
I think my biggest concern really is if you're hoping to purchase at 500,000, your salary needs to be around 125,000 to qualify. Yeah. If you're on that salary, let's think that you've got no outgoings, because obviously if you've got commitments, your salary is going to need to be even higher than that, and you've only managed to save a £5,000 deposit. That's where my concern is. It's not that it's not a great product. I think it's brilliant that Accord are trying to help first-time buyers. There definitely needs to be more out there for them. I mean, like Ken said, Nationwide do a brilliant product, but they still need a minimum of 5% deposit. My concern is more, you know, in the Southeast and London, house prices are considerably higher. I just don't think it will fit with the income that you need to benefit. It's much more suited, I would say, for sort of 250 and below.
Yeah. I think it's a good point.
The clients that I spoke about, they actually do have more than 5,000, but they wanted to buy a property where they could hold some back to do something up. And also, because one of them isn't a first-time buyer, they needed some for stamp duty as well. And so where you say, you know, they've only managed to save the 5,000, I think that's a really valuable point when your salaries are, you know, that much higher to be able to even borrow 500,000. But there are, I think, some cases where perhaps they have managed to save some more, but they need to use that to do some of the other stuff involved.
Yeah, no, absolutely.
It's just that innovation, isn't it? Sorry, John.
Yeah, and the rate isn't great. Let's not forget, it's it's just shy of 6%. You're tied in for 5 years.
Yeah, it's not free money, is it?
No, and you know, potentially if house prices don't continue to rise or don't rise considerably over the next 5 years, you may have trouble remortgaging when you've still only got 1% equity. It'll be interesting to see if Accord will allow you to product transfer at the end of the 5 years and what that looks like. But you know, anything new is always good to see. It's always, like you said, Ken, another string to our bow. It's something else we can offer, and there will be someone that it fits perfectly for, just like the Skipton.
The track record mortgage.
Product. Yeah.
I do think that's a really good point, Kate, with the loan to value being so high. You know, the future, that's going to be hard to get that loan to value down and even have the possibility to move, really, lender, isn't it?
Unless, like you said, they're buying a project that they're going to do up and add value to.
Well, I guess a lot depends on house prices, doesn't it? It's a 5-year fixed. It's repayment only, obviously. So you are cutting down. So I guess in 5 years' time, hopefully you'd be at 95% or even 90% if house prices do start to increase again. So look, it's innovation that is to be welcomed. So it'll be interesting to see if any other lender comes out with something. I've heard from several lenders that they all want to be known as the saviors of the first-time buyer market. So expect some other schemes to come out, not least whatever the government decide to eventually do, which will be interesting. So anyway, we're here to talk about self-employed, which is a big topic. And in my view, the self-employed have always been like the lifeblood of the UK economy. And it's always bothered me that some lenders will lend to a newly employed person up to 95% loan to value in their first job in an industry, but make it difficult for the person they work for, even if they have been established for some time. Have you seen the mortgage market for the self-employed evolve over the past few years, especially coming out of the COVID period? Katie, if you want you want to start on this one?
There's definitely been changes, some not for the better. For example, Santander reduced their, they used to use the latest year's income, and then they removed that and averaged it. Metro Bank changed their criteria around self-employed income, that they gave more multiples. There are lenders that like self-employed and that are a lot better for self-employed people, especially if you're a limited company director. They'll allow you to use your net profit rather than what you pay in dividends. Most people like being self-employed because it gives them the advantage to be more tax efficient within their, not self-employed, limited company, because it allows them to be more tax efficient than being a sole trader. So there's definitely lenders which favour that type of calculating the income on your salary and net profit as opposed to salary and dividends. So it ends up allowing people to borrow considerably more. But I think on the whole, especially the main lenders on the high street, they definitely prefer the security of an employed person. And it is crazy because, like you said, they'll lend on a first job. Some even lend on a contract. You don't even need to have started the job.
Yeah,
you can borrow off a day one contract or a contract that doesn't start for 3 months, which I don't understand. Especially, self-employed people, if you get your head around their business or the way that they pay themselves or the way that they the word's gone out my head. The way they set up their business.
Yeah, exactly. Yeah.
If the underwriter can get their head around that, like Coventry are very good with that, then they're more inclined to lend and they want to lend. But I think you need someone that fully understands it rather than just a generic yes or no when it comes to self-employed.
And Gemma, obviously coming out of the COVID period, we had lenders really row back on their criteria. They were very nervous about the self-employed and everything that brought. What have you seen with your clients now? Are we totally over that period now?
So who was that?
No, I don't think we're totally over it. But we are seeing some relaxation in it, in what they need to present. But just like Katie said, I think that lenders, the more they understand the client's business and how it's set up, therefore the more the broker understands it, the more the client can explain it, the better it is for the lenders. You've got to offer them so much security around and understanding around the business to see it. And obviously after the pandemic, they wanted that security and then some, and then some, and then some. And it was really hard. Yeah. And it has eased up a bit here. But in general, with self-employed, it's about, you have to jump through more hoops. It is frustrating, especially like you say, where you can get a job on a contract that you've not even started or know you're going to enjoy yet. And I definitely think there could be improvements with that element. But if we understand that and we're not going to change the world of self-employed mortgages today, it's about, really getting that clarity on how, like Katie said, how they've set up their business, how it works, what does it entail, and kind of being so clear to offer the lender that clarity.
And Ken, from your point of view, obviously the self-employed, there are lots of different shapes and sizes, and contractors and freelancers are a massive part of this area as well. And again, policies from lenders vary dramatically here. So what's been your take on what's happening in the market for those?
Yeah, I mean, the contracting community, they're quite robust. Freelancers, contractors, they're sort of used to the hustle and bustle and the changes of the market. I mean, there's this massive legislation that came in IR35, which disrupted the market massively. So all contractors typically were limited company directors, usually one-man bands, maybe had the wife or the partner as a secretary just to offset a little bit of tax. But most of them were limited company directors. And that was all well and good until HMRC came in and said, well, you're not paying the right amount of tax, this, that, the other. IR35 came in, and then umbrella systems all of a sudden came in, and they said, look, you had to be an employed individual coming into this. Now, there are a mix for them. You've got some inside IR35, some outside IR35. I love the old outside IR35, limited company director, contract, limited company business accounts. the banks that operate in the field of contractors have got a good handle on it. I mean, the forerunners were the Halifax, who were very well known for contractors. Virgin, when I started, it was Clydesdale, Virgin, and Halifax, and that was it.
Yeah,
and,
that's right. Yeah,
and now everybody and their mother does contractor policy. You know, you've got Accord, you've got Nationwide, you've got NatWest, you've got Coventry, Metro. There's a massive arena of lenders that will do it, all with slight different tweaks. And I think that's the difficulty for all of us that are in the self-employed space, whether it be for a contractor or whether it be for your limited company director, your sole trader, is that when I first started, and guys, I don't know if you can echo this, when I first started as a broker, I just dealt with vanilla, paid people, pay slips. And as soon as somebody came to me that was self-employed, no matter what entity they were, I wanted to run a mile because I didn't understand what the lenders wanted. I didn't understand what to ask them for. And it takes time to learn your craft, time to understand what the lenders want, time to keep up with all the changes that are happening, all the variables. So actually, I think for someone who is self-employed, having the ability to deal with a broker that has a good understanding of the market and what lenders want will make their passage to their mortgage much easier. And that's where, you know, like Katie was saying earlier about the different limited company structures and being able to explain to lenders how they're made up is really important. But that comes with confidence of understanding it yourself. And there's a lot of brokers out there who just don't have the amount of business coming to them to get experienced. Whereas as soon as you start to get a bit of a reputation, whether it be contractor mortgage services, and we get a plethora of contractors, or whether it's just people that know you can deal with self-employed, they feel much more confident that you might have the knowledge to help them.
And Ken, sorry, just picking up on one point, the IR35 point.
Yeah.
Has that furore around IR35 calmed down a bit, or is it still there?
No, it's died down. There was listen, there's not every lender wants to deal with umbrella systems and umbrella companies.
Yeah.
You know, they're either going to treat you as self-employed and not class you as employed, or vice versa. So there can still be a little bit of a mess around it. But again, it's knowing which lenders will do it. There are certain lenders you can go to and it's as smooth as peanut butter. And there's others where it's like a rocky road. But the system itself now, I think lenders have got a firm understanding of what it is and whether they want it or whether they don't want it. And for the contractors themselves, I would say a good 80% of my contracting community now are working via umbrella companies now.
Right. That's interesting.
Big shift. Yeah, massive shift.
That is a big shift. And so Gemma, are you seeing more? So we're seeing more appetite from lenders for helping the self-employed, or I think we were talking earlier, and sometimes you feel that lenders hate the self-employed. What's been your experience personally as well, as a self-employed broker, I guess?
Yeah. So I'm glad you asked. My experience is why I'm quite kind of, you know, passionate about the self-employed, is because when I've been self-employed my whole life, and my husband and I've got limited company, so we've both been self-employed our whole life, and I haven't been working in the mortgage industry for, you know, years and years. I've only been in here just over 3 years. So prior to that, I've had 2 mortgages as a self-employed applicant, and it was the most stressful thing ever, because mainly I didn't understand it, and I just assumed that the lenders hated me because I was self-employed, asking me all these questions. You know, my poor broker, I didn't realize how hard she worked until I worked in it myself, and I actually messaged her like about 3 years too late and went, thank you for everything you did, because we were a nightmare. And then now working on the other side, I've kind of gone, oh, right. Still a lot of hoops, still some like bugbears there, but actually I get it from the lender's point of view now as well. And so it feels like these two worlds are coming together, and the lenders, they don't hate you. They just want to understand you. And I think you know, when you run a business of any kind, it's so personal, it's so emotional. So when you're getting asked a very kind of black and white question, what's this? Why is that happening like that? You feel on the back foot, you feel a bit defensive, because that's a fair point. People aren't asked that. They're asked that maybe about their personal bank statements, but they're not asked, well, what are you wearing that to work for? Why did you choose to travel by train that day? And who is that line manager? And what, you know, you're not asked every little detail about these things, but you are as a self-employed person. And usually you love your business. You're fighting for it. You've done 2+ years of trying to get to this mortgage, and someone's questioning you, and you do feel like you're on the back foot. And I think trying to help clients understand, oh, it's not that they hate you, they just want to understand. it might have helped me to feel a little less kind of, crying into my soup.
Katie, is that the same to you?
I actually get much more satisfaction out of helping a self-employed. Sorry, all my employed clients.
Yeah, I know what you mean, though. Yeah,
but I do get. I did a purchase application last week, I believe. It offered as I pressed submit. It was nationwide. Wow. 2 employed people filled out the application, pressed submit, and it offered straight away. That would never happen with a self-employed person. It just wouldn't. Yeah. And I think that's the difference. It is more challenging. I love it. Most of my clients, as I said, most of my clients are self-employed, but it's just that little bit more satisfaction when you get the offer, especially if it's been one that they've asked loads of questions and you've got all the answers and it all makes sense. The client's explained it all properly. It's more satisfying.
And when the client doesn't think it's going to happen, and they've had hurdles that they have been able to get over with other brokers even, and yet all of a sudden you've taken it over with your experience, and that phone call when you phone them, and you've got the offer already and waiting to send them on an email, but you just want to phone them and say, do you know what, guys, we got you that mortgage offer. It's an amazing feeling, especially for the self-employed.
I do think though we should maybe, because I just say, look, just leave it all to me, don't worry about it. It's
you make it sound easy.
I make it sound easy, but I think if we actually let the client know maybe how many hoops we jump through or what we actually do, I don't, because I like to not stress them out. But I don't think it is, like you said, Gemma, it's not fully appreciated what we do behind the scenes sometimes, or not even appreciated, because they do appreciate it, but it's not understood.
I think maybe when you're jumping a hoop, perhaps explain why in a very soft way. Not like you say, you can't. It would stress them out if they knew everything.
Do you know your case was declined until I told them about this?
Well, like maybe some of the questions we get asked by underwriters, if they knew how ridiculous some of the questions we get asked are, this is what we had to answer. That maybe just laugh about it after, but
So that's an interesting point, Katie, and we know that different lenders do different things with salary and dividends, net profits, operating profits. Some look at retained profits, etc., and it's a bit of a minefield. Do you feel there's enough expertise in this arena on how to read and understand accounts and underwrite effectively, especially on the lender side sometimes, in terms of some of the questions that are coming back?
To be honest, no. But I think it's not necessarily the underwriter. Sometimes it's the admin, because a lot of lenders use an admin team to collect the data, look at the figures, and then pass it on to an underwriter. And I think that section, maybe they're not as experienced. Or there's been many times I've had to get a BDM involved to explain something that is, to us, it's obvious. Or the accountant has to explain something. I think to be honest, I sat with my accountant when I started getting more and more self-employed clients, because once you do someone's, they've got a friend and they've got a friend, and when more coming through, I actually sat with my accountant and asked him to explain the accounts and asked him to explain what the numbers were, so I could understand it, so I could then explain it. And I don't think not every broker is an expert in everything. Like I said, I deal more with self-employed than I do with anything else. So I've kind of made it my mission to understand it and to get it and to know how to explain it. But I don't think lenders, because they don't want that kind of client, maybe they would prefer a less risk client. They maybe don't put the training in or look at it as much. It might have to go to a senior underwriter if it's a high level of, or if there's been a big jump as well in business. They don't like that. Rather than being like, brilliant, this company's doing really well, they kind of take it as a bad thing.
I was just going to say, just about that middle sort of ground of before it gets to the underwriter. So with contracts, we have to send in the full contract, T's and C's, and the assignment schedule, which you would expect because it lays out the foundation of what the client's doing and what they're getting paid. And we will go through every single contract and highlight, because we know what they want. So we highlight all the essential bits: day rate, how long they've been doing it, what their role is. It's all highlighted. And my paraplanner, Lisa, the boss in the business, my wife, she then scans it, she sends it through, she's going to speak to them. She'll always get a call. There's one particular lender who is very good at contracts. I understand it, but don't seem to want to read a contract. And we'll say, oh, we can't see this. And we've highlighted it. It's there. And she has to say page 5, section 4. Oh, yeah. So what did you do before you called us? Did you just not look? It's just crazy.
Yeah. It's very interesting, all of that. Do you think, Ken, that technology can come in and do you think, Ken, that technology can come in and make the self-employed journey for mortgages a lot easier?
Yes, and
or
no.
Do you think actually it will cause more complication because lenders might go down the simplistic route of just logging into?
I think there is. I mean, look, we know about. Yeah, I mean, if we go back to Katie's example there of the paid person that got their offer straight away, and listen, MPowered are getting a lot of that. Good plug for MPowered there. You see what we did? They get a lot of automatic, and it's all because of the computer systems, the data, the interlinking with the interbanking, the links to HMRC. And I think when it's a paid person, P60s and all that jazz, I think that's very straightforward. I think sometimes having that human understanding of what the situation, the complexity of their business, it's not always just about the business figures. And whilst they might be able to have links into HMRC to get numbers, I think it still needs more behind it. My fear would be that they would make decisions just based on the data in front of them and not see the case as a whole.
Yeah,
I think there's a place for everything. So, if it could read a contract quicker and pull the information out of a contract, brilliant. But you still need to have that human. Plus,
we don't want to be out of a job, do we?
No.
Don't want to lose. Yeah.
We've
got a mortgage to pay.
Don't worry. Don't worry. We won't be. It's interesting. And so, what else do you think lenders and brokers should be doing when dealing with self-employed applicants? What are your tips for the lenders and brokers side, and then we'll come on to actually the clients afterwards.
Well, I think it's like Kate said, get yourself educated, so you can understand if a set of accounts are in front of you, what does those accounts mean? Having a good understanding of that, I think, is a great start. SA 302s are straightforward, aren't they? That all the data is there. Accounts, looking at what's in the accounts, I think, is a real education. So I think as brokers, I think, we all deal with self-employed. So I think we see a lot of accounts. So it's getting that education. If you don't see a lot of them, you've got to do something to train yourself so you can understand it.
Yeah.
Accounting for Dummies is a really good book.
I bet.
That is a good book. Yeah. I think I've got that somewhere.
I
didn't understand it, to be fair.
Yeah.
Would you have to get more of an upgraded version of that now, because it's moved on a little bit, hasn't it? It's been out for a while now, hasn't it?
Yeah. It changes dramatically, doesn't it?
Yeah. I don't think being, afraid to speak to their accountant with their permission as well can sometimes be really helpful. And they're often in the loop enough to know that, you're going to contact them, or you have got permission to contact them, and just getting some clarification sometimes can really help you as well, can't it?
Most clients,
I think
big sigh of relief, isn't it? If you say, would you like me to speak directly to your accountant?
Yeah. That's something I've always tried to do is speak to the accountant. It helps get knowledge of the thought process behind them, showing certain figures and what they're doing, and understanding the business a little bit more, and can also help if you know that their accountant is switched on, or actually in some places they're not switched on at all.
Do you know, it's happened a few times. I've spoken to an accountant and I've said to the client, your accountant hasn't got a clue.
Yeah.
You need to change your accountant, because they are not, the way some people get paid. Some accountants they have one way of doing things and that's it. And I think if it's an innovative business, you know what I'm saying, business, you need an accountant that can work with you and grow with you, do a business plan with you, understand where you want to take your business, rather than just filling out a tax return. But the amount of clients that don't even know what they earn, they don't know what the documents are, they don't know what's going on in their accounts. The accountant just gives them a figure, they pay a tax bill, and that's it. I definitely think that, you know, you should speak to an accountant. We should speak to the accountant, but also in regards to what lenders can do, you know, Santander and Coventry purely work off an accountant's reference. So why can't other lenders do that?
Yeah.
Why does it have, like HSBC, love them, but it's very frustrating that the accounts have to be on Companies House. If there's a slight difference, you have to upload a reason, or, you know, and they won't do anything till it's on Companies House. And sometimes that can take days, weeks. So that holds up the process. They won't trust just the accounts. So I think there could be more done to make things a bit quicker.
But the accountant's reference is a really good way of doing it, isn't it? Because, you know, you've got the numbers straight from the account, and those are the figures you're going to use when you're doing all your work. Everything correlates, everything matches, and that hopefully then stops there being that disparity. You know, you take some lenders, I think Barclays, the last time I used them, they asked for accounts, they asked for SA302s. They just wanted everything. Whereas a lot of lenders will say, well, look, one document that gives us what we need is enough, but we want this document rather than that document. And some lenders then will say, well, we want this and we want that. And I get it sometimes there's a bit more of an oversight. There's some numbers we're not quite sure about. We'd like a little bit more corroboration from other data. But from lenders' perspectives, I mean, if they could all, I mean, I really like the Coventry. If you're a limited company director and you've had one trading year where it's been a little bit low, and COVID was good, you know, we know what COVID was all about.
Yeah.
They had a low year. Then the next year, they may have won some contracts. Things may have been improving. The ability to just take that current year in isolation, not average and dilute it, was massive for a lot of people. You know, I really do like the Coventry for that. But again, you know, you've got net profits and salary with other companies, and you've got the traditional mindset of some banks, which is, yeah, we're just going to get salary and dividends, average it for the last 2 years, regardless of what the business is doing or how it's projected to improve.
Rohit's just made a valid point in the comments.
Yeah, it's just
I'd love
about
to see more.
yeah.
Are only focused on minimizing tax, but clients are to blame because they don't explain their plans. Well,
yeah,
that's what I'm saying. You know, if you actually explain to your accountant what you're trying to do or what your plans are, then obviously they'll factor that in
to your
when
tax plan.
producing your accounts.
Yeah, it's interesting actually how many clients come to us for a self-employed mortgage, and they haven't even spoken to their accountant about it at all. They don't realise. But I guess that's the education piece.
Yeah, it'd be good to be encouraged to have that fluid.
Yeah, absolutely.
Or when you get someone that does their own tax return.
Oh no.
Sorry,
I think through expenses because I didn't want to pay any tax. It's like, well, how do you want to buy a house?
Yeah. I have to say, most of the guys I speak to, and it's not everybody, because as you know, there's always the one that has no idea what they're doing whatsoever. Doesn't even know if they're a limited company or a sole trader. And you have to say, well, do you pay yourself dividends? I don't think so. Okay, well, let's just say you're a sole trader. You know, how do you not know? You know, but from that perspective, the planning side of things, they just hate it, don't they? Because they know they're going to have to pay a shed full more of tax to get themselves into a position to show themselves in the best light to lenders. And I think that's where actually an innovation from lenders could be, well, actually, why do we have to force people into paying more tax? Why can't we look at their retained profits? Why can't we look at the whole picture like that and say, rather than forcing them into a position to pay more tax to be able to demonstrate their numbers to us, let's look at their business as a going concern and see what it is that is doing. Why don't we draw figures from that?
Yeah, if you're forcing people to take more than they actually need, just to demonstrate mortgage. I'm a big fan of lenders who look at retained profit. I think that's really important.
Yeah, more sensible.
And also, usually with if you're averaging, then that that dilutes it even more. So I'd love to see more lenders take the latest books, and they could put all sorts of caveats of security in that. Maybe they have to have been trading for 3 years, and maybe there has to be 6 months bank statement shown, whatever they need. But I'd love to see more lenders do the latest books and not the average.
or the latest year and a projection or management accounts or something like that.
I mean, I suppose this is a good point to throw out as well, is that most companies, as they'll expect that they have to have been trading for 2 years, but we do have some lenders that will take 1 year of trading. Not as many as we would like. And just as like you were saying, Gemma, a bit more opening of that would be great. But there are lenders out there, if you've been trading for 1 year, they'll take it. But the first year for most people's trading is not their best year. Most year it's a setup year. There may be costs, whether it's IT or equipment. So it's never going to be their greatest year, but it's good to know there are lenders out there that might be able to do it.
Yeah. And it'd be good.
Will take 1 year, but average it, which is not many people use them for that. But if they have had a really good first year, but they have to have been trading like 18 months or something, I think it is, they will then average it, which is good. If it doesn't fit with Halifax or whoever else does 1 year.
Yeah, and Bob's made a good point on the comments. Underwriters need to think like private banks, just have a more holistic approach when it comes to the self-employed, which is definitely something I'd like to see rather than a tick box mentality.
Well, I think there's that fear of being called upon later to justify their actions. If it's a tick box, then they feel safer, don't they? But Bob's right. Much more holistic thinking should be applied when it comes to self-employed. If you're brave enough to step into a self-employed role, the last thing you want to do is fail in your business. So why would you want to fail on your mortgage? They go hand in hand. So yeah, I agree with Bob.
Yeah. And what about the clients finally on self-employed? Have you, Gemma, any top tips for clients who are self-employed preparing for a mortgage, apart from speak to your accountant?
Yeah, speak to your accountant's one. I think as well to, if you're a sole trader, to do your accounts as soon as, so, arguably spring, summer, because once we get to October the 5th, for most lenders, the accounts can't be older than 18 months. And yet for HMRC, you can, do it in a big rush in January. Now, January is a horrible time to do your taxes. Don't do it then. I think do them in spring, summer. And then from a mortgage point of view, you are ready with your latest accounts. It's a nicer time of year to do them. It makes zero difference to anything else. It's just, I think, where HMRC and the mortgage industry aren't aligned with their deadlines, it can confuse clients and they can come to you and say, look, I want to buy a house. And you look at their books and you're like, these are too old. And then they've got to rush around and do it. So I think get in the habit.
Also, you have 9 months to pay your tax bill.
Yeah, that's
Which
true.
is always a bonus. Yeah. How long can we delay it? No, I think they're all really good points. I think actually I know we're brokers, so why wouldn't I say this? But we said speak to your accountant, but speak to your broker. Understand what the banks may want from you to be able to help you then plan as well. I get a lot of people who will talk to you and say, well, look, if we want to try and aim for this, these are the sort of things you need to be thinking about and what the banks are going to be asking you for. So plan towards that. And then that actually might help them with their conversation with their accountant.
I think I want to echo what Gemma said. This is the perfect time as well, because yes, you can still use your 22 and 23 accounts. But if you've had a smashing year now, or you're coming to the end of it, it could make such a difference to your borrowing capacity as well if you submit your 24 accounts now.
Yeah. And actually that 18-month window that Gemma was mentioning, correct me, Kate, because I know you deal with Coventry as well a lot. I think they have a shorter time window. I think there's maybe 14 months or 15 months. They're definitely not 18 months because I was speaking to the BDM last week. They have a shorter window for how long the date of their last account can be. So again, speaking to a broker and double checking your plans is going to help.
And also Virgin are later. They'll accept it up till December, as Bob has just said. I think, on the whole, self-employed people are going to do whatever it takes and go to the nth degree to make sure that their business is profitable, and they're going to do whatever they can to pay their mortgage. Employed people have the ability to go into another employed role and another employed role. There's less kind of stress and pressure behind making it work. I actually think we're less risky than employed people, but
I agree. That's something I've always said, and a few of the comments have said that actually, that lenders maybe need to just review their risk strategy around the self-employed, because I think employed people are potentially riskier than someone who's been self-employed and has a business that's been running successfully for some time.
Well, jobs aren't for life anymore like they used to be in your great-granddad's time, are they? I don't know how long we got left, but do you also see a lot of self-employed people will come to you and say, I am more complicated and the bank's going to charge me more interest rates, aren't they, Ken, because I'm self-employed? I think there's that misunderstanding as well. It's not about the rate, it's about how they underwrite you that's different. And actually the rates are the same for everybody. So don't lose faith with that. You're not going to get charged more just because you perceive yourself to be more complicated because you're self-employed.
And again, that's where we come in as brokers, isn't it? To educate more. All of us have a bit of a responsibility to educate the public more that actually, if you're self-employed, you can get a mortgage and it doesn't have to be as complex as you think it is. And also it's not going to be as expensive as you think it might be.
Yeah.
Also, one thing just popped into my head. Does anyone get clients that say, oh, my accountant's told me to just pay myself more. Can I just give you 3 months pay slips and give myself a pay rise? And it's no, that doesn't work.
That's all part of the education piece, isn't it?
Not a mortgage advisor.
Absolutely. So look, I mean, we've just 45 minutes has just gone in a puff of smoke. Sailed by. Final words of wisdom.
Use an advisor.
Katie, use an advisor. Absolutely, 100%. I think that's a massive point, actually. If you're self-employed, trying to navigate the mortgage maze as an employed person is hard enough, but self-employed without an expert that knows which lender does what is almost impossible, isn't it?
Yeah, and not all brokers are cut from the same cloth. Not all will have the same understanding of self-employed like we might. Definitely check the credentials and see if they do understand, because you want to be in the right place the first time. First time.
100%. Gemma, any last words from you?
Perhaps get you. Sorry, this delay is really annoying, isn't it?
Yeah, sorry.
Perhaps having that conversation a year or before you're ready, being prepared as you can, because the broker can work with you over the years and everything can line up for when you're ready. So preparation is key, I think.
Okay, so I think we are out of time. So thank you to my guests, Ken, Katie and Gemma. Thank you very much.
You're welcome.
Thank you.
Katie and Gemma, you've been fantastic. Ken, you are now officially, looking at the comments, the housewives' favourite. Whereas I've been likened to a Scouse drug dealer, so I'm not
sounds like a fair comparison. Sounds like a fair comparison, if I'm honest, Monty.
fair comparison. Right, I'm going to wear suit and tie next
user? Is that Daryl?
I would suspect so, yes. So thank you for joining us. An article about the live will appear on the Intermediary, and I do encourage you all to get involved with Newspage. The more voices we have, the better. And we have started shouting out a Star Broker of the Week at the end of each webinar. So please tag MPowered on socials when you have seen a broker go above and beyond. And this week, the shout out is to Andrew Simmons from Simmons Mortgage Services. Hello.
Well done, Andrew.
Andrew's dedication to explaining every detail of the application process was invaluable for his client, described as going above and beyond with his support, expertise and patience. He helped secure the best mortgage for their needs. So big well done.
Top man.
And finally, remember, you can listen to all of these on Spotify. If you've enjoyed this, I've been Andrew Montlake. If you have not enjoyed it, I've been James Cleverly. Until next time, have a great week.
Have a good day, everyone.
Bye-bye, everyone.
Ta-da.